What's up guys, William Ryan here from Optimal Advance, back with another video. Today we're going to be going over the euro dollar, and basically what I'm going to be doing is I'm going to be recapping the trades that I took. I did not take them on this demo account, I took them on the demo account on my phone. So if you guys want to see screenshots of my entries and exits, please feel free to do so on my Instagram page. It's Optimal Advance with an underscore at the end. So let's jump right into it. So I took three shorts today. I took a small loss on gold earlier in London session last night, and then I bounced back in New York with a couple of wins. So I had a good day yesterday, and let's break down my entries and my thought process. Okay, so if we're looking at the ICT 2022 model, we have a swing high taken here. Right, we have a market structure shift here. So this is indicating that institutional order flow is now bearish. Okay, and then what's the next thing that we look for, right? We want to be looking for that fair value gap, right? And or the order block breaker, whatever your personal preference is in terms of PD arrays. Okay, so in this setup here, we have the bearish order block and the fair value gap. So we'll outline this here. So my first position, I actually did not enter when price moved up into this gap. I actually entered as price was expanding lower here, creating this fair value gap here. Right? Oftentimes, if I do miss my entry, I still get in the move. Right? If I'm anticipating price to move lower, and we have a clear draw on liquidity, which we have here in the form of equal lows, I will get in the move because I'm expecting price to target certain lows or certain fair value gaps. Okay, so price came up, hit the fair value gap, we started to expand lower. I got in on this candle here, on the 1120 candle on this broker. Okay, and people may say, oh, Ryan, you're chasing price. No, I'm not chasing price, because what are these two up close candles here before the down move? It's a bearish order block, right? So if price comes back up to these up close candles here, it should act as resistance and we should fall out of bed. Okay, and that's exactly what happened. So me getting in here, right, before this order block actually formed is not a problem, right? This is something that traders have to realize and understand, is that if you miss your original setup, there's still ways to get in the marketplace without chasing price. Okay, you have to have narrative and context behind your decision to get in the marketplace, right? Even when you do miss your ideal entry. And this is one of the frameworks that I use to get in trades when I do in fact miss these key or my ideal entries, right? So my first entry, like I said, was right in here. As price was expanding on this down close candle, this is where I got in. My first order, my second order, I got in at this fair value gap here. So as soon as price came back up into this fair value gap, I went short, and my stop was above, just above this candle's high in here. Okay, So a little bit wider stop on the second position, but that's okay. And as you guys can see, price respected the fair value gap. Look at the bodies in here, right? And then we also ultimately moved lower for the sell side liquidity resting below these equal lows. All right, so we'll mark this out. This was my second entry. And last but not least, I had a third entry, and I'm sure you guys can pick it out by now. I entered at this fair value gap and this order block here, right? So the same entry that I took on the first position that I missed here, I got it perfectly on the second one. Okay, so this was my third entry. And as you guys can see, price respected those levels really, really nicely. And ultimately we attacked the sell side liquidity that I was targeting, okay, below these equal lows, right? Notice how when price is moving towards these equal lows, see how it's doing it like lethargically here? I'm not getting candles like this or like this, right? Price is like crawling its way to the objective. I had all my take profits, well, at least my take profit for this last position down here. I took everything off below here, and then as you guys can see, price rejected and moved back into the middle of the range. My first and second position take profit, I believe, was below this swing low here. Oops. Okay, so as price was moving lower below this swing low here, I took everything off my first and second position, right? And as you guys can see, this swing low had a nice reaction here. So we drove down, took out the sell side here, and then we return into a deep premium to then go short again for this liquidity pool over here, right? So my first and second entry, I took my partials below, or sorry, I took everything off below this swing low here. And on the third position here, I took everything off below the sell side liquidity here. Okay guys, so if you're looking at the ICT 2022 model, right, each of these setups, right, are the 2022 model, okay, but they just happen in the span of one price swing on the 5-minute time frame, right? Like if you're to look at the second entry here, right, what do we have here? We have a liquidity raid. We took out a swing high, right, and then what did we do? We broke market structure here. So after price broke market structure, we came back up. Where's the fair value gap? It's right here, right, coupled with the order block. Okay, so this is where I went short, and ultimately it panned out. So roughly today, I took a little loss on gold, like I mentioned earlier, and then I had 3 wins on euro, and altogether I captured, so there's 35 pips there. Let's just say 20 pips there. So that's 55 pips. And then we'll say 30 pips here. All right, so that is 35, 55, 85 pips captured on euro. right? And if you just look at it this way, I secured 85 pips in a 50 pip range. All right, so this is the perks of, in my opinion, trading on the lower time frame, because you're going to get much more entries. And although we have a smaller range here in the form of 50 pips, we can squeeze out, like we've seen here, 85 pips. Right, so this is definitely the #1 advantage of trading on the lower time frames. Like if I were to go on the 1 minute here, there'd probably be like maybe 1 or 2 more setups that we could have taken, right? But so today was a really good day, a really good educational learning day for myself. Also a good day for my emotions, for my psychological aspect, right? I took a loss and then I came back and kept a level head and ultimately had a very successful day in the market. So I hope you guys have learned something from this video. I hope you guys take something away from this video, and I thank you guys for joining me, and we will see you in the next one. Take care and have a great night.